Hello, everyone, and welcome to our Core SSG tutorial. Our presenter tonight is Ann Cunez, Better Investing's Senior Manager of Education Programs. She is involved in developing educational initiatives and programs such as Stock Up, First Cuts, Ticker Talk, and other webinars that help BI members become successful long-term investors. Ann is also a critical member of our online tools team and a qualified expert in all of our online tools. Take it away, Anne.
Well, thank you, Susie. That was Susie Artsberger talking to you. She will be watching your questions this evening, and we hope to address as many of those as we can as we go through this out loud. All right, well, we've got a lot of material here to cover, so let us get started with the main event. I'm going to start with this quick disclaimer. I'm going to remind you that the stocks, everything that we're mentioning here tonight is for educational purposes only. We are not and never do make any recommendations to buy, hold, or sell any securities. We may hold some of these in our own portfolio. I don't, the main one that we're talking about tonight, but maybe I will sometime in the future. And we might have different websites, products not endorsed by Better Investing included in this webinar. Just mentioning them or including them is not a formal endorsement. This is being recorded and will be available online in our video learning library and on YouTube, hopefully tomorrow. All right, so tonight, quick agenda. All of this is going to be in demonstration mode. We are going to demonstrate what the CoreSSG stock selection tool can do for you. So we will together complete an SSG. We'll save that SSG. We'll show you how to share that with your fellow investors. And we will also talk about updating an SSG. And again, there's the reminder that we will have a recording. Well, we've hedged it a bit, 2 to 4 days. Usually we get that out the next day. All right, before we get started, I do want to point your attention to the fact that we have 3 handouts in the webinar control panel. And one of those is this Quickstart guide. This is a really great 8-page document that will help you get started with the CoreSSG. If you can't remember exactly how I did something tonight, reference that. It will get you started. You can get it here in the webinar. It's also available on the Help and Information tab of the online tools, and we'll talk about that at the end of our webinar. We've also got another handout. It's called the tutorial handout, and it is a lot of slide shots from the tool itself. Now, this isn't a presentation based, it's not a slide based presentation, I should say. We're going to go live to the tool, but you can use this as a reference just to remind you of all the various features that we talk about. I think we'll be talking about all the features that are included in that handout. And finally, the purpose of this presentation is actually to acclimate you and get you familiar with the CoreSSG and how to navigate it and how to do different things within the tool itself. What this session is not a how to make my judgments on the SSG session. But for that purpose, I have provided this guidelines for beginners. This what are we calling it? Ssg Beginner Guidelines is what it's called in the handout section. And that's a quick 2-pager that if you're truly new to the SSG, it will give you some good guidelines to how to evaluate quality and how to make your judgments going forward. We're not going to spend a lot of time on that in particular tonight, although I can't help it. I am in charge of education at Better Investing. All of that comes into every presentation I give. All right, so those are the handouts. All right, so where do you access the CoreSSG? Well, it's right from the BI member homepage, and I'll demonstrate this live in a minute. and I'm here on the home page. I am logged in. It's greeting me by name, you can see there, so I know that I'm logged in. And this stock selection tools box is where you should be focusing. We have access to all of our tools right here, but this box here, where it says Launch SSG, enter ticker, you simply have to enter the ticker of the company you are interested in, click on Go, and you will be taken directly to the stock selection guide, such as this. This is the first screen that you would see. Just before we go to the live demonstration, I just want to give you a little bit of a lay of the land to learn where things are. So the first thing that most people will notice as they come into this tool is there's a large graphical display of data of some kind. So that's what we're looking at here, in particular sales on this particular sheet, but it's a graphical display of the data. Below the graph, we have that same data presented in a tabular form. Okay, so if you're a numbers person, you might like to just read those numbers. It's all right there. Two ways to look at the data. To the right, there is a panel called Education. And that is very useful for beginners because the Core SSG is a tool designed in particular with the beginner investor in mind. So we thought, well, if you're not sure what you're looking at, why you're looking at it, we give you a little bit of information in this education pane to help you understand what it is you are looking at. So that can be handy to the brand new investor. Below that, there's a legend where we can turn various things on and off. We'll talk about that more as we get into our tool. At the very top, and very common to so many websites, we've got various menu items. We will talk about several of those as we go through our demonstration. Now, these main tabs that you see at the top, this is the main navigation for the Core SSG. And this is one of the reasons it's one of the best tools for a new investor to use as you're learning the SSG. If you follow the navigation as we're presenting it here in order, it kind of leads you through the process as you complete the SSG. So what do I mean by that? Well, notice that there's these tabs up at the top. So if you follow each one of these 5 tabs in order and complete the steps that are under each one of these in order, and you do, like for the first Analyze Growth tab, then you do these first 3 steps, then you move on to the Evaluate Management. There's different steps that are listed under there, do those, so on, the Forecast Sales and Earnings, Assess Risk and Reward, and Determine our 5-year potential. If you follow that in order, that's why we call this a learn by doing experience. It will lead you through the process. It's perfect for our newer investors. You know, before we leave this, I want to say this out front, and I'll probably say it multiple times through here, but these first 2 tabs, Analyze Growth and Evaluate Management, we use those to help us evaluate the quality of the company. That's step 1 when we are looking at an SSG. There's no judgments to be made other than to ask yourself, is this a quality company? If the answer is yes, at that point, we would then go on to the last 3 tabs, complete those, and that helps us determine if the stock is selling at a good value to make it a good investment. Okay, so I'll probably repeat that, but I wanted to make that point here. There's kind of a dividing line between 2 and 3, between those 2 tabs. For our navigation, you can click directly on these tabs and these steps, and I'll do that live. But we also have these next and back buttons, which is handy if you're not sure, you know, where you are or you know what the next step is. You can just kind of lead yourself through by using the next buttons. That's kind of the overview of what we're going to see when we get to the SSG. So let's go there. Let's go live to our tool. So here I am at the Better Investing website, and I'm welcoming me by name, so I am logged in. Now, the stock that we are going to look at tonight, I selected Monster Beverage. The ticker is MNST, and that was found it for me, Monster. Yep, that's the one I want. I'm going to hit go, and that is going to open up a brand new stock selection guide for me. And here I am, just like that screen that we just looked at. We're looking here again at Analyze Growth, tab 1, and we're in step 1. We know that because this is green and this is red. These are the active steps that we are in. This is telling us all about the historical sales for this company over the last 10 years. So let's look at some of the elements of this chart because we're going to make some observations about the historical sales. First of all, what I notice is the data is a nice straight line sloping up as it goes to the right. That shows me that this company has been growing consistently and very nicely over time. Notice that all of these filled in circles, this is the annual data, the fiscal year data for sales for Monster for each of these 10 years on the chart. So if it's a filled in line, it is annual data. Notice when I'm hovering over this chart, it actually shows me the data point. That's nice, but it's also right down here. The data that we can see is listed right down here. And of course it matches 2014 or 16 sales for Monster, 3049. Yep, 3049 right there. This straight underlying green line, that's our trend line. So what we're doing there is we're fitting all the data to a single straight line to enable us to measure the slope, the growth of that line. And so looking at all 10 years of data, that's this underlying green line, we see that that is growing right here. It's labeled at a growth rate of 12.6%. Now, you might observe that, well, Monster Beverage did have quite a bit of growth early on in 2010, 2011, and maybe I don't want to include that in the trend line. So you can remove pieces of data to get a better fit, if you will, for the trend line. You do that by clicking on the year. See, my cursor turns to a little hand. I click that, it kind of crosses it out, it redraws that trend line, and it went from whatever it was, I can't even remember, 2 seconds ago, it was like 13 or something, 12.6, I don't know, to 11.4. I can click it here, or you can also take these out in the chart, in the table itself down below. So I'll do that to demonstrate. So here again, it redraws now with the remaining data, and boy, that is like right under that data, and it looks like this company has really consistently grown for the last 8 years at about an 11% growth rate. Now, let's say you weren't too familiar with this company. It's like Monster Beverage. Many of us do know that they make the energy drinks, and that's what they do mainly to make money. But if you're not sure, I'm just hovering my cursor over the title bar of the company. And when you do that, you're getting a lot of information, such as what month does the fiscal year end? What industry is the company in? We see this one is beverages, non-alcoholic industry in the consumer defensive sector. What is the company size? This is a helpful item for people that are just learning our methodology. We identify company size by the amount of sales they have in a fiscal year, anything under 1 billion being a small company, anything over 10 billion being a large company, and if it's between 1 billion and 10 billion, it's a medium-sized company. So you don't really have to remember all of that. If you can just go right here and you can say, oh yeah, it's a medium-sized company because it is between 1 billion and 10 billion in sales. And we see in the most recent year, that was 4 billion in sales. Most importantly, we get a short description of the company. So truly, if you're not at all familiar with the company, just reading that, you can get a rough idea of what the company does to make their money. Okay. One other item that I would point out if I had it on here, which I don't, if there were any quarters that were announced after the fiscal year, those would be extended beyond. There would be another year added, and they would be open circles. I'll show you that in just a minute with another example. But those would be open circles. And if it's an open circle, then you know it's most recent quarterly data, and it doesn't really reflect the fiscal year data. You can see what the growth in the last quarter had been. So the last quarter that they reported was from 12 of 2018, 12 of 2019, that's the latest quarter, compared to the year ago quarter, 12 of 2018, and that represented a 10.1% growth rate. Okay, so you can see what just that quarter grew at. Handy information to know. All right, one other thing I want to talk about before we leave this screen, I will remind you that the education is there. You can scroll through there and read that information at your leisure. But I do want to point you to this legend. In the legend, we bring peers in to compare to our company. What is a peer? A peer is a company that is in the same industry as Monster, as the company you're studying. So it would be in the beverages, non-alcoholic industry. It would be of the same company size. So it would be a company that would be 1 billion to 10 billion in sales. This is for the pre-selected peers. And it would be then the three that get selected we order those in order of earnings per share growth rate. And so the top three, the ones with the highest earnings per share growth rate, get pre-selected. So I turned those on, as you noticed as I was talking. Oh, open circles, wonderful. Here is an example of what the quarterly data looks like. This particular company hasn't announced their fiscal year 2019 data yet, but you see that they do have 3 quarters. You can see what the difference between what quarterly data looks like versus the fiscal year dots. Where was I going? Okay, so I'm not real familiar with most of these companies. I want to also show you that if you look for these little triangles, that means, as it's showing me there, that I can open or close that data grid. I'm going to click on that, and that opens it up to me. And what I get, in addition to just the ticker, it tells me the company name, it gives me all the data, it tells me what the overall growth rate for those companies is. You can also see some information about an industry average and a peer group average. Okay, I'm going to take some of that off to make this a little less busy. Now, like I say, I'm not too familiar with some of these, and I know that if it has a .to, that's from the Toronto Exchange. I'm not too interested in looking at a company like that, and I don't even know how to pronounce this one. I don't know what these are, and they don't look all that great on the SSG either. Why do we look at these peers? Because we want to find the very best or one of the best in the industry. So if you have something else that you would like to compare your company to, you have the ability, you have the freedom to change the peer group to anything you want, or the peers, I should say the peers that appear here on the SSG. So when I click on change peers, I see my tickers that are picked. Monster is in the beverage industry. I'm going to pick big old Coke, not the same size, which is why it didn't get automatically selected as a peer, but I'm okay with that. I want to see what it looks like compared to my company. And good old Pepsi, go with that. And I will hit update my study. And now I have Pepsi and I have Coke. You can see by where they are located on the chart here, they're much larger companies. And if I look at the data here, you see that instead of, this was a $4 billion company, Pepsi's a $67 billion company and Coke is a $37 billion company. Very large. Those are both large companies. And again, that's why they weren't pre-selected for our peers to compare. But you can change those peers and you can pick anything that you like. Okay, I'm going to turn those off. And I think that about covers. And I spent a lot of time on this screen. I'm not going to spend that much time on all of them because a lot of them have the same kind of format. So let's move on to our next step. I could click right here, or I could click my next tab, and that takes me to step 2, where we're going to consider the historical earnings per share. So here we are looking at historical earnings per share for Monster. Again, I'm making the observation that we have nice, consistent growth. If I check my growth rate here down at the bottom or in the table, 19.7 is the underlying growth rate for all the data points. Again, if I wanted to take out maybe some of this older data that was maybe a little faster growing, it did move it down a little bit, 19.7, 19.1. It's not making a huge difference. To put those back, just click it again. It's a toggle. It'll take it off or it'll put it back in. So those didn't make a lot of difference. So I'll just put those back in. Again, I can click on my legend to compare my competitors, color-coded. So I didn't mention that before, but they're color-coded there, so you can kind of discern which is which. Okay. And when I'm looking very quickly at all of these, I'm liking Monster quite a bit as far as the consistency and the strength of the growth. 19.7% growth over 10 years for a medium-sized company is spectacular. And frankly, I wouldn't expect that to continue over the next 5 years as it gets much, much larger. Here again is the recent quarterly data. So again, that was the last quarter of the previous fiscal year, and this company grew at a little bit lower, but still at a very nice 9.3%. So that's step 2. Everything is more or less the same. Education, there's something there, and it's all talking about the historical earnings per share as opposed to the historical sales. Moving on to the next step in our Analyze Growth tab, remember, we're just looking at the quality. And does the growth look consistent and strong enough for the company that we are studying? Now, the historical stock price review, this adds an element of prices to the chart. And it puts the sales on here, and the blue earnings line is down below. And what is in between are what we call our price bars, okay? And what that is telling us is a high and a low price for every one of these years, and it gives you the range. You can also see that range down here in the data grid, okay, if you want to look at the numbers. But generally, what we like to tell our people is that sales growth drives earnings growth. Okay, so sales is driving earnings, and over the long term, earnings growth will drive stock price growth. This is why we like to find stocks that we term up, straight, and parallel. These are going up, they're fairly straight, very straight, and fairly parallel. We like to see that growth in tandem, and the stock price will generally follow. All right, at this point, we have completed the 3 steps in the very first Analyze Growth tab, okay? We are going to move on to the next part of our evaluate, our quality evaluation, I should say, and that is the Evaluate Management tab, and we've got 4 steps to look at there. Again, you know you're in the tab that is green, and you know you are in the step that is red. That's how you can kind of identify what it is you're looking at. So here in the Evaluate Management, our first one is percent pre-tax profit on sales. That is basically how many pennies of profit has the company made on a dollar's worth of sales, okay? It's telling us that percentage on this chart graphically, so you can see the trend over the 10 years, as well as you can see the data down here below. You do get in this table a 5-year average. You can see the trend has been, pretty steady over the past 5 years. Yes, there's ups and downs to it, but when you look at the scale and you look at the actual numbers, it went from 35.7 to 34 to 33.7. Something to watch, but not overly concerned. Quickly, you might take a look at some of the competitors. And purple, who's purple? Coke is purple. I like Coke's trend, but I will make the observation that Monster is higher in each one of these cases. And here I just expanded the data there so you could see the data below. And here you might want to look at an industry average, which is blue, and we see that Monster's much higher than the industry average, and the peer group average is also much higher. So again, we're trying to evaluate, have we identified an excellent company? And so far, the answer appears to be yes. I want to point out here too that you can remove some of the data here if something was wonky or way out of balance. You want to take one of those out, you can just click on that and it will readjust the average if you're really scrutinizing that data. So you do have the abilities to do that. I'm going to move on here to the return on equity. Percent return on equity. That's our second step in our evaluate management section. Basically, this is what percent has the company earned on the shareholder equity, which is basically the shareholder value of the company, the net worth of the company. I should put it that way, the equity of the company. It's hard to explain in a really quick presentation here. But what we're going to look for here are trends. And I didn't mention this before, I probably should have. While we're looking at pre-tax profit, we don't have any numbers that say, oh yes, above 30% is excellent, but below 10% is terrible. No, you have to consider industry to industry. So for example, this is a very good profit margin for Monster Beverage, but if you were to compare this to, say, a grocery store, which has in the neighborhood of 1 to 2% profit margin, which is very typical for a grocery store, that wouldn't be fair at all. It wouldn't be fair to say, oh, Monster's so much better than a grocery store. No, you have to consider industry averages and how those look compared to others in the same industry. That's not exactly as true. It's somewhat true for return on equity, but we do have some kind of absolutes that we look for. We like to see numbers that are at least 15%, and as they approach and exceed 20%, we consider that to be an excellent value or an excellent return. I shouldn't say value, an excellent return on equity. So what I notice here on Monster is they were much higher, then they came down, but lately they're trending up. I will just point out that in 2015, and this is kind of beyond the scope of this class, but I'm going to say it anyways. In 2015, they entered into a big strategic agreement with Coke that allowed them to use their bottlers, and they issued a lot of shares and equity. And so, really, the way the company is structured kind of changed in 2015. So I'm putting much more weight in these figures right here because of that big structural change that they underwent in 2015. So that's the background on that. But in any case, these are excellent numbers. You see when they made that change, the return on equity was only 12. That might be a bit of an outlier because of the big change. And maybe you would even want to strike that to not consider that as part of the average. But then since then, we've seen this very nice increasing value. Uh, very nice trends that we're seeing here. If we see flat trends or rising trends, those are good. What we don't really like to see are declining trends. And just again, quickly to look at our competitors, um, everybody seems pretty good. I can't say what Pepsi did in 2018. That might be an anomaly, but I have still no reason to dislike the Monster um, quality. It's still looking very, very good to me. Okay, let's move on and look at debt very quickly. Debt, this is a nice story. There's no debt for Monster. If I looked at some of the other competitors here, I would just point out that some of them have a lot of debt and others do not. The thing about this step 3 total debt is I don't pay too much attention here, except maybe to look at the overall trends. And that's because just knowing a total debt number doesn't tell me anything in particular about the company. I like to put it in context, and what we do in our SSG tool is we put debt in context of capital, the capital structure of the company. How much of that is debt? And so, of course, for Monster, it's zero still because they had no debt. So that percentage is going to be zero. But those large numbers that we saw from Pepsi and Coke, when you put it in on the chart in the percent debt to capital, you see that, oh, well, yes, and maybe we can see it better if I open this up. Those are kind of high numbers, maybe a little higher than we're comfortable with. We kind of like to focus in on companies that have maybe 30%, 35% or less of debt. Um, so that's what you want to pay attention to there. I'm just going to take these off, focus on my beautiful flat line there for Monster, 0% debt to capital. And at this point, I'm stopping and I'm asking myself, well, I just looked at the first 2 tabs. I've looked at a number of elements that point to the quality. Is this a quality company or is it not a quality company? I think this definitely is a quality company. I would proceed with the rest to determine a valuation. If my answer was no, I would discard this stock study and look for something else to study. I wouldn't want to waste my time looking to make forecasts and doing some more research, because that's what's coming up next. It's time to do some research, and so I'm not going to do that if I don't see that the company is quality. So at this point, Susie, it's probably a good time to break and see if we have any questions on those first 2 tabs that I have gone through.
Well, thank you, Anne. You have done a thorough job in explaining those. And we don't have any questions that are outstanding at this point. We are handling them in the background, so I would continue on.
All right, and I do want to thank Susie Artsberger, and we have Charles Bard, Joan Loken, and Carol Thine all helping us out in the back room. Thanks, guys. I really appreciate all of your help. All right, well, let us move on because we're going to go to the third tab here. And you notice that I just keep clicking on, and that's my habit. I'm not big on the next and back, but they're there. I could easily click those as well. So the forecast sales and earnings tab is next. That's made up of two steps. First, we're going to focus on forecasting our sales, and next we're going to forecast our earnings. All right, so let's start with our sales. And first of all, let's look and see what changed on our graph, because our graph got a little bit bigger, didn't it? We not only have our historical data, but we have 5 years added to our graph out in the future, because that's what we're going to focus in on. We're going to focus in on making a 5-year projection. That's what this dotted line represents here, our projection. We haven't made one yet. So it's 0, it's flat, it's representing the most recent data, the most recent fiscal year data. That's our projection line, and that's what will change once we do make our projection. This other little light green line is actually an analyst consensus estimate that we get with our data that comes from Morningstar. So this is an analyst consensus estimate, which means a number of analysts have contributed their numbers to what they think Monster will grow their sales over the next 2 years. This is a shorter term forecast than what we're looking to make ourselves on the SSG, but still it's good information. So I can hover over the line there. I can see that that's an 8.6% growth rate, 2 years. So that's in 2021. They are expecting that to happen. And we can see that same data here in this analyst consensus estimate pane. Okay. Now, when I am making my projections, I'm going to use history. I'm going to use this piece of data, but I'm going to stop here and I'm going to recommend that you always do some additional research. If you're not sure how to do that, we'll talk about some additional resources towards the end. There's a lot of great education. In fact, it was just last week. Carol Thine, who is in our back room, did a nice stock up presentation on using some of our standard sources such as Value Line, Morningstar reports, analyst reports, and CFRA reports. But in addition to those kind of premium reports that she was talking about, this research tab, this is one of those menu items at the very top. I'm hovering my cursor over that. And when I do that, you see that I get another menu. And we can go to the Better Investing website and get information. We can go directly to the company website, Monster's website, excellent source usually to find some investor relations information. Analyst estimates. This is the one I wanted to point out to you now. Now, we're not going to go through these right now, but I wanted to make you aware that they're here. There's 5 different analyst estimates. I would say, in addition to what we've got here included in the analyst consensus estimates from Morningstar, which is included in our tool, check a couple of them. I like to check the Yahoo analyst estimates and the Zacks. Why do I check more than one? Because often they tell a little bit different story. They will be different groupings of analysts. Different analysts have different opinions. So all of these sites don't necessarily all agree. I like to check several different sites. So I would encourage you to do that. And that is right from your tool. And I will just demonstrate that if you did open one of these, I'm going to open Zacks. Notice that it opens right up in another tab in your browser. So you can read through that chart and you can see what the analyst estimates are there for sales. You can see what they're talking about for short-term earnings, for long-term earnings. Apparently they're not having one right now. They're between analyst estimates. That happens from time to time. But this is in a different tab. Now I can easily get back to my stock study. All is not lost. So that's wonderful. I use these all the time. Love it. And notice that it took me right to the Monster Beverage Zacks page. I didn't have to search around. I didn't have to put in a ticker. It takes me right there. Super easy. I would encourage you to get familiar with our research tab and check out some of those. All right, so let's see. What else do I want to talk about here? I think nothing else except now is the time to make my judgment. Now, like I said, I'm not going to talk so much about why or how I made the judgment, but I picked Monster for a reason. And one of the reasons is because a first cut stock report was recently completed on it. All of our members here who are in the audience can go and look at that. If you would like to learn more about why I'm picking the judgments that I am, you can read that report. So for now, I'm going to tell you that I did pick a 9% growth rate for sales on Monster. So I placed my cursor right here. This is where you have to enter your forecast, just like it says. I'm going to type in my 9%. And now watch what happens to my projected line, that dotted line, once I hit my update study at 9%. That's telling me that if this company, if Monster were to grow their sales at 9%, 5 years in the future, we would have a $6.4 billion company as opposed to that $4.2 billion company. And there is that number right there. Okay, so there you have it. It's as easy as that. We have made our sales projection and we're now ready to move on to the second step within this forecasting sales and earnings, and that's all about forecasting earnings. Same kind of lay of the land. We got our new 5 years additional of space to make our projection. The analyst consensus estimate that we get for Morningstar is a 5-year. It's a longer term estimate, okay? This is common for most of these research sites that I talked about. The analyst estimates will be short for sales, 1 to 2 years, and we will have more longer term estimates for earnings per share. Okay, that's just typical. So we see here that in the case of Monster and from the Morningstar consensus estimate, we have 12.5%. We can read that right there from that light blue line. We have not made our projection yet. Get a little bit of research that we would want to do, whatever your favorites are. I always encourage you to do some research, but it's kind of beyond the scope of this class. And I am going to say, let's see, from my first cut that I did, I picked 11%, a little bit higher than the sales growth rate. I'm typing in 11 in there. And I'm going to update my study and we will see our dotted line go right up to the right. And there we have it. And so now when we look at that figure, that 11% growth rate equates to a $3.42 future earnings per share. Now at this point, well, no, I'm going to hold this thought in my head. I'm going to show you something here. I'm going to duplicate this. Because I want to show you something, it's key. I want to show you something about projecting a start point. So I do have this other Monster first cut. And when I did that first cut, they hadn't announced their fourth quarter earnings yet. So notice that I have those quarterly figures. And I'm going to go to earnings here. And I want to point out that, typically, we're going 5 years out in the future. And when you have additional quarters, in this case, 3 quarters had been announced from the 2019 fiscal year. Okay, but not the full year yet. The most recent fiscal year was only 2018. You have the ability to change your projection starting point. And it's important when you have a growth company, I think, to give them credit for all the growth that they have already experienced. And with a solid growth company, such as what I think I'm looking at right here, I anticipate they're going to continue growing their earnings in the future. So my projection start point, and actually the default that we have set in the tool, is to start the projection start point at the most recent quarterly figure. But there are options. If I were to select and change this to start from the most recent annual number, look what happens. I want to point out that at 11%, going from the most recent quarter, I'm going out a full 5 years out here to the 2020, the third quarter of the 2024 fiscal year, but not all the way completed because it's the third quarter. So 335 is what that number is. If I were to change that to start instead from the most recent annual data, I click on that radio button, it moves my projection line to start at the most recent fiscal year, which was $1.76. And out here, 5 years, not a full 5 years from the current time, from the 3 quarters, but it's a more conservative way to look at it. And that gives me a $2.97 $2.97 earnings per share 5 years in the future. Did you see the difference between that? So I want to give them credit for this growth. And I also want to get a full 5-year projection. So for that reason, I almost always use a projection start point to start at my most recent quarterly figure. There are some exceptions to that rule, but I'm assuming I'm talking to mostly beginners here with the CoreSSG. The stocks you should be looking at should be high quality growth companies. And I think this is the projection start point that makes sense for all of those. And it made quite a bit of a difference in the final earnings per share. Now I want to go back to our current study here. I was getting ready to make a point, like, why do we make this earnings per share projection? This is a very important number to help us establish a future high price. Once we establish a future high price, we're going to be able to determine if the current price is a good time for an investment. Okay, so it's going to help us evaluate the value of the investment, the potential value of the investment. So remember this $3.42. We're going to use that in this next step. Okay, so we're done forecasting our sales and our earnings. Now we're going to go on to assess our risk and reward. Step 1, there are 4 steps, as you see, that we're going to go through here. Notice, I hope you've noticed, all these steps change. Every time I change tabs, the steps underneath change. So the first step here is forecast high price. What are we looking at on this graph? Well, the graph that we're looking at, actually, you get a clue right here, historical high PE. It's a graphical representation of the high PEs over the past 10 years for this company. And here is the data down below. Now, we like to focus in on the most recent 5 years, and we also like to give an average. Again, you can also look and see how does this compare to the others in the industry. Well, Coke kind of something skewed Coke's PE right there, so I'm taking that off. But you can see that in general, Monster has a pretty rich PE. I can see that by just looking at these numbers all by themselves. Anything over 30 starts to make me a little bit nervous, I have to say. Monster has consistently been over 30. Remember 2015, they had that kind of structural change. Um, they had a bit of an earnings blip, and I think that's what caused the earnings to really ramp up there. Again, you can take outliers, you can remove it from the data. It doesn't get graphed, it gets removed from the average. But what I see here is we have a declining trend. I'm going to pay attention to that. In those guidelines to beginners, it says, this is something to keep you out of trouble, beginner. If you don't go over 30, you're probably going to be a little bit happier. In this case, in fact, I think I did on my first cut go a little bit above 30. That was a joint first cut between Ken Kavula and myself, so I might have to blame him on that. No, really, we think very much alike on these things. So, you have a lot of data here. Some people would consider the 5-year average. I look at that number as a very high PE and one I'm not comfortable with. I would probably be comfortable as high as 35, what I put on the first cut report that I published. We have some other pieces of information here in addition to the average high PE, and I did take that one really high one out. We also have an overall average, which is the average of the average high and the average low. So it's the overall average, that's 35. We'll look at the average low in just a minute. We also can get a glimpse at the current PE, still a pretty rich 30. So, I would probably go in the neighborhood of something at the lower end of what I'm seeing in this trend, maybe even slightly below it. I've got beginners in this audience. I'm going to go with my guideline of no higher than 30. How about that, folks? So I put that in there. That was one part of determining my high price. I multiply it by my high earnings per share forecast that we just calculated on the previous step when we made our forecast for our future earnings per share growth. I multiply those two numbers together and I get a future stock price of $102.60. That's how we establish the high price, the future high price. These are judgments. This was my judgment. This is my judgment. This is based on those two numbers. So you have to think about it and put what you feel is a reasonable expectation for the company going forward, and something that you're comfortable with, frankly, as I alluded to the fact that I'm not comfortable if I were to use an average of 41. All right, I'm going to click Update Study. This is a very important step to make sure that I log that in my current stock selection guide. And I'm ready to move on to my next step, which is forecast low price. Same thing here. We are looking at the historical low PEs over the past 10 years. Again, you can see that same kind of trend in place, that structural change, which seemed to shift valuations a little bit for Monster Beverage. Again, that 37 just seems artificially peaky and high to me, so I can take it out. I can look at the last 5-year average of 28-ish. I see that we have a downward trend. And we're going to do the same kind of calculation to come up with an estimated low price. So we're going to come up first with what is our estimate for the average low PE. I know those guidelines for beginners kind of focus in on, don't go higher than 20, I think it says. If you are a beginner, it will keep you out of trouble. That's a good guideline. I think for the purposes of the SSG that I did for the first cut, I think we focused in on the low part of this trend. So I think 23, 22, I wouldn't argue with anything in that area. Even 20, I would definitely not argue with anybody about that. That would be very, very reasonable, I think. If I put in, I'm just going to put in 22 here for my average low PE forecast, times my low earnings per share forecast. So what's that? Well, that is actually this number here. It's TTM, which stands for trailing 12 months earnings per share. Trailing 12 months is the equivalent of the last 4 quarters. In this case, it happens to be the last fiscal year of $2.03. But if it was a different quarter, say the third quarter, that could be different than the fiscal year number. I typically always use the trailing 12 months earnings per share for the same reason that I like to project from the most recent quarterly figure, because I like to give credit to the company for the growth that has already taken place. This is why I also always pick this as an option to auto update when I do my updates, which we'll talk about in a little while, to automatically update my low price to be based on the trailing 12 months earnings per share. So next quarter, when the earnings per share presumably is higher, because this is a growth company, they would get credit for that, and that would boost that low price a little bit. You can toggle that. I'll just point out, if you like to go in here and manually update, think about it yourself, that's perfectly okay to do. I'm pretty lazy and I like it to be automatically updated for me, but that's your choice. Okay, so I put in my low PE times my low earnings per share forecast, which really represents the most recent earnings per share, and that gives me a low stock price, a projected low stock price. Now, the other thing that I'm going to do here is I'm going to check that I'm going to ask, is this stock price sufficiently low enough below the current price to account for any market volatility? And yeah, we've had a little bit of that lately. So I don't even know if that's enough, but the number I like to use is to look at least 20% or so below the current price. 20% would roughly be, let's call it 13 bucks below. So yeah, that's more than 20% below. So I'm fairly comfortable with that. Now you'll notice this is one possible option for our stock, our low price. We have another option, and it's based on the recent market low, which basically is looking 2 years back and looking at a 52-week low and picking the lowest number out of that grouping. So it looks at the lowest price within about the last 2 years. I'm in that very same ballpark, and I'm pretty happy with that. You also have an option to just type in your own number. I have to say I rarely do that. I will say that 98 times out of 100, I am probably using this box here, the low PE times the low earnings per share forecast, because I've thought through this and that seems reasonable. And if this actually comes up with too high of a low stock price, for instance, if it came in at maybe only $55, that would only be like $6 below 10%. I would say, oh, well, maybe I need to reevaluate my low PE forecast to lower that a little bit. That's usually where I will make my adjustment. So that said, I picked this one, and all you have to do is click on the radio button next to the selection you want, which that one is picked since I've been messing around. I've been making my judgments in here. I'm good with that. I'm going to update my study to establish my low price, which I've now done. Next, we're going to assess where the current price is in relation to what we just forecasted, which was our high and our low price. There's that 102.6 that we forecast at the high price side, and there is our 44.7 that we just did on the low price. And what this does is it creates our zones, telling us that the lowest 25% of this bar, if you will, is our buy zone, the middle 50% being our hold zone, and the top 25 being our sell zone. And here is the detail as far as, what the numbers are for that. And actually, there's the math if you want to know exactly how we calculate that. But it's a pretty simple calculation. So I see that Monster at 61.80 is almost in the buy zone, but not quite. It would fall in the hold zone. Okay, great. Another way we like to evaluate the current price is to look at our upside downside ratio. And this helps us identify our potential gain compared to our potential loss. And here the rationale is that we like our potential gain to be 3 times larger than our potential loss, as we've defined it using our judgments on this stock selection guide. So this is telling me that in this case, at this price, using these judgments, the upside downside ratio, the upside is 2.4 times larger than the downside risk. I'd like that to be 3 to 1. And if it was 3 to 1, guess what? It would also be in the buy zone. So those would kind of match up. It's a different way, a different number, a different way to evaluate if the stock is selling at a reasonable price. It's close, and it might be something I want to put on a watch list. But before I decide that, I'm going to look at one more item, and that's, so I've gone through all 4 of my steps here. I'm on my 5th tab, and that's simply telling me what might my total return be for this particular stock. So what are we looking at here? Okay, this is probably not the greatest example I could have picked for this demonstration, but this is looking at payout ratio. This is all about a company that pays a dividend. Monster does not pay a dividend, as you see when I expanded that data grid. This is telling us the payout ratio, which what does that mean? That is simply the percent of the earnings that the company pays out to its shareholders in the form of a dividend. Monster pays no dividend, so their payout ratio is 0. This is very, very typical for many growth stocks because they want to take all of their earnings and not distribute it to their shareholders, but grow the business. That works really well if the company is growing and they've got places to put that money. More mature companies will often distribute a dividend as a way to increase shareholder value. Quickly, so I can show you, I am going to go to another recent stock study that I put together. And this is Comcast, and they do pay a dividend. So I thought this would be a good one to show you. So here I am showing you Comcast, and here is their dividend line. This is the payout ratio, and we are seeing that on this chart here. You're saying, wow, what happened to their payout ratio in 2017? Well, I don't know for sure, but in 2017, there was a lot of tax gyrations going along, and I think Comcast had a big benefit to their earnings per share based on the Tax Cut and Jobs Act. I'm just guessing. It might not be that, but it might be too, because I'm looking at this dividend, and that's a nice steady increase. Very nice. So I'm going to kind of discard that as an anomaly. It's not their norm. It's not what they typically do. I think typically what they do is in the neighborhood of 30%. So in the case of this particular company and this SSG, I'm just going to show you here that the potential price appreciation was 10.8%. The yield was future yield based on a payout ratio of 26.9%, which was the old average, would be 1.6%. This is a minor judgment, but I could change that. I'm going to change it a little bit higher than maybe I would. I'm going to go to 35 just to show you. This is 1.6 here. If I move this to 35 and hit update study, that makes a difference of about 0.5% to the yield. So I call it a minor judgment because it doesn't have a huge effect on the bottom line, if you will. But if you've got a company that pays a decent dividend, it is definitely something to pay attention to. So that was my example to show you on dividends, because Monster isn't going to help me there. So for Monster, when we're looking at our total return, I'm seeing that the potential price appreciation based on the future high price that I estimated is about 10.7%. 0% contributed from yield. So the two components really boils down to one. So my total return is simply my price appreciation. And I would have to ask myself, well, 10.7%, is that enough for a company of medium size of this quality? Maybe it would be. Maybe I would be looking for something closer to 13, 14, 15%. In a market like what we have now, I think we can be patient. And in fact, somebody is telling me that, yeah, Monster closed a lot lower than yesterday's price today. So what was the comment here? 57.39. So hey, yeah, everybody go update your prices. And let me just show you, I could do that right here. I could do that through the basic data. We have the power, folks. What was that? 57.39. Automatically, we
Wait.
only get updates. Oh, thank you.
Yeah.
I bad fingered that, didn't I?
Yeah.
Okay, I'm gonna just type that in. I'm gonna update my study and I'm gonna change, oh, it got a little boost based on that. Maybe that's still not enough. Well, let's see what the market does over the next week or so. I think we have time, folks. I think we have time to evaluate and do lots and lots of stock studies. All right, that is the completion of my stock study. I've got one more really important step to do, and it's highlighted on this yellow box. I've got to save my study. And I'm going to do that. By default, it's ticker and date. I'm going to add core to tor, if I can spell tutorial, to that so I can remember that this was from the core tutorial. And I'm going to save that. And notice that my study name is now filled in. My little yellow box has gone away. I am saved. I am good. So I have saved it and life can go on. Let's see. I want to show you just a couple more items here. I want to be sure to show you print. We often get a lot of questions on print. So I clicked in that menu item and this brings up a box here. When we print, quote print, we are generating a PDF that you can then save on your computer. You can pass along to your fellow investment club members, whatever you want to do. There it is. I open that file. And for those of you that are familiar with the way the stock selection guide looks in its old traditional form, you see here it is. There are my growth rates that I put in here. And everything I took out, you know, as data that I removed. Remember, I took off some of this data here from 2015, those very high PEs. There's our high and our prices, and it did recognize that price that I typed in that somebody in the audience told me, well, today's price was a lot lower than the 61 or whatever. And so there's our annualized rate of return, our 12.3%. annualized rate. So that's how we do our print. Let's see, what else were we going to talk about quickly? We were going to talk about how to share some of this data. If you are in a club, I want to point out again this menu item. File is where I am, and I'm going down here to share. When you do that, you're going to see another pop-up, and you're going to have some options here of different ways to share the data, and who you're sharing it with will depend on what you're sharing. You can share an online study, which means that the recipient will get an email with a link, and all they have to do is click on the link, and then they get the study placed in their own library of studies. Very convenient. You can save it as, or you can share it as an ITK data file, which is the format that Investors Toolkit uses. So if some members of your club use that desktop version, which is Investors Toolkit, this is the way to share the data that you have, the SSG you've completed. You can share it as a PDF report. And you can add notes. We didn't talk about notes, but you can add notes yourself, or look at the notes that are from various people in the community. You can send yourself a copy, and then of course you have to select your recipients. Susie loves to get all of my stock studies. So anyway, you can manage this list. I shouldn't go so fast, but you can manage this list. You can add your club members. You can add people manually, whoever you want. You could send it to more than one person. I could pick all the people if I wanted to. I won't. Just you, Susie, you're the one that gets it. And you can add a personal message, say, hey, let's take a look at Monster, put it on our watch list. When I click on share, that will actually create an email that will go out to Susie. I check the box to send myself a copy. It'll send me a copy. And she will be the recipient of the SSG in all those glorious versions that I selected, any and all. You don't have to pick all of them, but do what works for you. All right, what else? Oh, refresh data. One more thing. Okay, so I think I'll close this. I think I'll go over here to Comcast. I'm going to show you, I've been kind of showing this quick nav real quick because I've been bringing up stuff. When you use this quick nav, it's a really super fast way to search your own saved studies. So I'm going to go back to, it was Old Dominion, OD, what is it, FL, there it is. And it was the tutorial that I did back in July, okay? So I'm gonna bring that one up because it's got old data. The most recent quarter was from May of 2019. I made forecasts, I forecasted sales, I completed this SSG. So I wanna show you what it is, how you refresh and when you refresh. So if there's been a new quarter, maybe just even new pricing data, you can go here to data, refresh study data. Now, when you do that, be aware that it does not affect any of your judgments. The judgments that you made will remain intact, okay? That's the beauty of it. It's just overwriting the company data and the stock closing prices. You could just do the closing prices and it's alerting me, hey, this is old, you really need to. I could overwrite all of the data. I could create a second copy of this if I wanted to. I have no need of a second copy of this. So I'm just going to go ahead and overwrite this from last July and show you what's going to happen to this 319, which was the most recent year or quarter, I should say. Now we've got more data. Looks like they didn't do quite so well in this most recent fiscal year, but the most recent data has now been added, and you can, evaluate everything. You can look at the forecast, you can evaluate the risk and reward. I'm just kind of curious. No, it's still not a buy, still a hold. Anyway, and the 5-year potential comes out to be a mere 7-something%. Anyway, it did that update. I'll just point out too that the current price did, let's see, I'll point it out here, that the current price was updated as of yesterday's closing price. That's how we get our data. It's always the previous day's closing price. And as you saw, if in a volatile market you want to get something fresher, go to data, company basic data, and you can put in today's price right there. All right, I think, Susie, unless there's more questions, oh my goodness, I've been talking a long time, haven't I? I need to go and finish up. But are there any questions? I mean, we've been
There
here
are
this long.
no open questions. You wrap it
You
up
guys
and
are
tell us
doing a
all
great
the stuff
job.
in your PowerPoint.
Thank you. Good job. All right, let's just review here. That was fast and furious. Hopefully most of it was clear, but there is more help available. Over here in this tab, I'm in the online tools, that little question mark guy, that's where you wanna go to find this. We've got access. This is one of the places. You can find these in the video learning library. You can go directly to YouTube, but they're all right here. The online tools, tutorials, all the different flavors that we run. Quickstart guides. I did include that core Quickstart, but we've got other versions that you might be interested in. Check them out. More reference materials. If you've got questions about calculations, there's that guidelines for beginners. We make that available there. And here's a FAQ and feature requests. I'm just going to talk about that in just a minute, but those are very handy. And finally, down here, we want to make sure that you know that we have a video learning library chock full of more information about, methodology. And I know we're over, but I'm just going to go there anyways. I just want to show you, here I am logged into the home page, the Learning Center, the Video Learning Library. If you're brand new, check out this Intro to the SSG series. It's going to help you learn more about what I just went through really, really quickly in an hour. If you're a little bit beyond that, then I would recommend this Adding Judgment that talks much more about research. Here's this great stock up that Carol just did about research. Check it out. Okay. So I know that was fast, but don't be afraid to just click around in the video learning library. There is so much information there, and you will learn a lot. All right, quickly, user feature requests. We use these. If you go to feedback.betterinvesting.org, you can type in some ideas that you may have for our tools. You can vote on the ideas that are existing in there. Susie and I, we use this when we're looking to make new things happen in the tools, new improvements, updates. So check this out and make some requests. And if you have some questions, we do have an FAQ page that has a number of questions on the online tools, on some of our data. Check out our FAQ, betterinvesting.org. Again, there's a quick link right in that help and info tab. All right, we do have another webinar coming up. Susie and I are swapping positions. She's going to do all the talking next time, thankfully. And she's going to talk about the SSG Plus tutorial, that stock analysis tool, which is very powerful. She'll be doing that on Thursday, April 16th at 8:30 p.m. You can sign up now, or you can watch your email, and we will be sending you your invitation. With that, I'm leaving you with our member services number. If you have more questions, please drop them a line or give them a call. They can get you on the right track. With that, Susie, I think I'm finally completed.
Great job, Ann.
Anything? All right.
Yep. We are all set. Thank you so much. And thank you to our backroom staff. And thank you to all of our audience for taking time out of your day and attending these webinars. We really appreciate your attendance. Keep in touch and stay well. Thank you and good night.
Good night.